Hello, welcome back. Normally a candle opens at the price of the last candle's close. When this doesn't happen, a so-called gap will be formed. These gaps can be very important when you want to trade stocks. These gaps can become really strong supports or resistances. Let's take BATL for example. When we take a look at its daily chart, we can see a gap, quite remarkable, from $2.05 to the low of $1.92. When volume came in at after hours, we saw Battle reject right at that gap zone. This confirms our suspicion of this being a really strong resistance zone. Now all we had to do is just wait for the moment it breaks this zone. Monday pre-market it happened. It broke it strongly. So we got in right away. After this strong breakout, it never looked back and went to $6.50 for almost 200%. It's not random that this was the top, because when we take a look at the daily chart again and zoom out, we see another gap, a huge one this time. So why did it reject around $6.50? Because of the gap. The gap served as a resistance here. That's why we knew we had to sell our position, or at least scale out most of it. Another great example from this week is FEED. This one has also a few gaps. When we look at its daily chart, we can see it has gone down big time. But when you take a good look, you can see it has a few gaps on the way down. The first gap we got here at $2.10 to $2. And the second gap we got right here from $1.59 to $1.57. A really small one, but it still is a gap. When it started gaining attention this Wednesday, it rejected right at the small gap, so we knew this was big resistance. We waited till it broke the zone. Once it broke, we got in right away. It went for a small 20% to the next gap, where it rejected. So, a nice small trade here. But after market open, it went up again after a slight pullback and broke the second gap. So reason for us to get back in again, this time for more than 40%. After this incredible day, it consolidated right at the gap zone in pre-market the next day. After it broke this zone the previous day, it bounced 2 times from this zone. Still, it didn't break it to the downside. This means that this gap zone has now become a really strong support zone. So this could be a nice entry zone for another trade with our stop loss right under it. The closer we got to market open, the more it started to move up. Once market opened, it went straight up for a 150% move this time. Do you see how great gaps can be? The last example is a really small one, DCX. This one started moving Thursday. When we look at the daily chart, we can see it has a recent gap from $4.60 to $4.24. Just like the other two stocks, it started with rejecting the gap, which confirms our theory of this gap being a big resistance zone. So now we just wait, and once it breaks the zone, we get in right away. This breakout move from the gap was only good for a small 15%. But you know what small gains can do. Small gains add up. They can create big money. Do you see how easy gap plays are and how much money you can make with using them as support or resistance? Hope this video helped you. See you hopefully next time. Bye.